Welcome everyone. In this video, I'm going to go through the weekly charts for stock market analysis. We're going to cover the tech sector. We're going to cover some various indicators, and we're going to look at some sector analysis. This video is really meant to give you kind of a weekly idea of what the stock market did this week and what it means for the longer term picture of the market. It's important to get the longer term picture when you're trading and when you're involved in the markets on a daily basis. You always want to keep an idea as to where the market might be heading long term. That is the current of the river, and we want to swim with the current. So that's what we want to look at in this video. Stay tuned. Let's get right into it. We're going to start here with Nasdaq futures here, looking at the weekly chart. Again, I start with tech because tech is the heaviest weighted sector in the S&P 500. So it plays a major role. And recently, really, we've been watching tech. When tech rallies, the market rallies. When tech sells off, the market sells off. That's kind of what I've noticed, at least. So Nasdaq futures here. On the weekly, we have a big doji candle right here, shooting star doji, or a gravestone doji. Or sorry, this is not a gravestone. But the point is, I get the names. I know the names of some of them. But this one is a doji, all right? And so it indicates a potential reversing trend or reversal candle. Now, usually these come at the top of a trend. And, the trend that we had on the weekly was a slight little uptrend here. And then it looks like we put in a reversal. But you need to see a confirmation candle. You need to see the next candle be a down candle to confirm that this was kind of a topping candlestick. Usually these come, or I look for these at the top of a long extended trend, something like this. If you had a long extended weekly uptrend, then you would look for a doji to signal the end of that top and a confirmation candle to confirm that. We've had a little bit of a downtrend, so this doji doesn't mean too much to me. What I'm really looking at now on the weekly, and I think what's probably playing out, I think we're going to probably come down a little bit more. And ultimately start trading around this 1,765 level. Maybe not next week, probably not next week, but maybe in the following week after that, we're going to be trading around this red trend line right here. This red trend line on the weekly comes from your bull market of, really 2009, 2010. So this is, again, log scaling. I use log scaling for all my charts. So if you're new and you don't understand why your chart doesn't look the same as mine, switch to log scaling. To do that on TradingView, you just go down here to the right and you can see the little log button. So click the log scaling. It's a more accurate way of charting, I found. And most of the pros use log scaling as well. So here's your bull market uptrend line, and you can see that we basically only broke once in the futures. This is when the Fed stepped in this year. And then we ramped up and really just what looks to be like a blow off top. Now we could be setting up for, there's a couple scenarios that I see playing out. One is we're going to base out here and find some sort of support and create some massive blow off top in the market. Completely possible. I don't see it in the charts right now, but we'll watch for that in the future. The other thing that I think is higher probability is we fail here and actually come back down within the price channel that we've been in for the last 10 years. I think we get back down in that price channel, down in here, and really at some point come down to the bottom of the price channel. It's been a while since we've been down there, so I think at some point we're going to work our way down to the bottom. So that's the futures, Nasdaq futures. Nasdaq futures, the only thing I see on the Nasdaq futures zooming in, slight up week right here on the, SPY futures, correction there. The slight up week here on the SPY. Never mind this downtrend line. This is something I've got from an hourly chart. And really what I see is, just a slight up week. It doesn't really mean much. I don't see anything telling me on this that we're, going up. The only thing I guess you can look at is we are making higher lows and higher highs, I guess, on the futures. Here, and that's going back to March. You've got your low down here, you've got another low here, a higher low, and a higher high and a higher high. So you are uptrending, and it is possible that we're going to continue to uptrend and even break the top of this red price channel that I have. The red price channel, this is 2009 lows right here, the bull market. And really this is how we held this trend line for the entire bull market up until 2018. If you remember right, this is when the Fed started coming out and doing repo injections, started providing more stimulus. They started cutting rates, and they started providing stimulus well before the mess that we're in today is when they started doing it. And that's because the market broke trend, at least I think. So the market broke trend, and all we've been doing ever since is back testing from below. So full back test here, another full back test here. Do we get another back test? Well, that's possible. Or we actually start to roll over. Remember, again, the Fed has pretty much used most of their ammunition. They have no interest rates to really adjust. And don't be confused. This rally here of 2019 was Fed induced, and this rally here of 2020 was Fed induced. And so, there's no more interest rates. They can go negative. That's true. And they can do more, bond buying and corporate bond buying and things like that. They can do that. But negative interest rates is a interesting dynamic in America. Yeah, I know it's in Europe, but the thing is, America's the world reserve currency, so it's a little bit different fundamentally. Okay, moving on. Let's look at Qs. All right, Qs on the weekly. Zooming in. Doji candle right there. You can see it. Nothing crazy, but looks like a doji. Ultimately, all I really get on the weekly here is the fact that we had a higher close than the previous week, and we sold off and closed the week down towards the bottom of the candle. So to me, I see this and I think that there's not too much I can read except for the fact that I think we're just going to continue down to the bottom of this trend line that I have marked out right here. And that is your bull market, the top of your bull market price channel for the 12-year bull market. That is the top of the channel. We overshot it. Oftentimes when you overshoot a price channel, then that's kind of a blow off top move, and then you come back down within the channel. So that's the only thing I'm going to really anticipate at this point, is that we come back down within the channel and probably hitting this area 254 right in there first, finding some kind of a support, bouncing up maybe up to the top of the channel again, and then rolling over down to the bottom of the channel over time. I don't know when it's going to get there. I just think at some point in the somewhat near future, we'll be talking about prices down near the bottom of this channel. SPY looks very similar to the triple Qs with this doji. SPY has, on the weekly, the SPY really, as you can see, the green line up here, this is the key line on the weekly that I think is the most important for the S&P 500 and the stock market really in general. You've got this uptrend line going back to 2009. You broke in 2018, back test of 2019. And then 2020, we didn't quite get the full back test. You can see they stepped in early and started to sell. I think that's because 2019 overshot the trend line just slightly right here, or early 2020. But basically when we tagged the trend line right here, we overshot it just briefly on the weekly and then sold off impulsively. So the next time it got up there, the sellers didn't want to take any chances. And they stepped in early, basically, before we ran up and tagged the trend line or overshot it. They stepped in early and sold it. Is this just the initial pullback, and then we're going to run up and overshoot it? That's possible. So we'll continue to watch what we have on the charts. The other thing to notice on the weekly is, the weekly has negative divergence. And this is a big pattern, a big picture thing. But you can see here on the RSI, you've got negative divergence. It's not there on the PPO, which is very similar to the MACD, the moving average convergence divergence indicator. But it's on the RSI. You can see we have a high peak here in early 2020, and then we made a slightly higher marginal high peak here in August, and with a lower momentum. So if this continues to play out this negative divergence, that would say that, you know, we're changing trend. And if you're changing trend on the weekly, we're talking, you know, years basically, typically in a trend change, if not, you know, multiple months, if not years. Big trends, you know, basically the next bear market. Looking at the Qs as well, you can see in the RSI, same thing here. Even more pronounced in the triple Qs. You have negative divergence in the RSI on the weekly chart. You had a peak here, and then you made a substantially larger peak there with lower momentum. So that is something to note, that there is negative divergence on the weekly chart. It's a big pattern. It's not going to play out tomorrow or even in a week. It's going to take time for this to start to work its way into the charts, to play out, this negative divergence to play out. But we'll watch, that's why we watch the hourly charts and the daily charts throughout the week. I don't look at the Russell too much, but I think it's important to watch as well. Russell 2000 on the weekly. We're just right there in the middle of this channel. So you can see I've got the channel marked, this sideways trading channel marked at top end purple around 159.70, and then the bottom end 145.50. And that's really where most of the trades have taken place. And then you, of course, you get these huge whip breakdowns. This is the Fed saving the market in, you know, when they did the repo injections and everything, and this is the Fed. The Fed started cutting interest rates here, and the Fed cut interest rates here. The Fed acted in both of these scenarios. And so this is the channel right there in the middle. No negative divergence on this guy. On the RSI, you have negative price momentum, and actually this has been in play for a while. Negative price momentum there on the RSI, and you have negative price action in the RSI, where you can see we're making lower highs and lower lows. If I draw that out, it's, you know, something like, I mean, you can capture this, but basically there's your lower highs and lower lows, this big pattern. It just shows that we're downtrending, but it's in a huge pattern. So, and you can attribute a lot of that, the range of that pattern, to the Fed. Basically, we have huge global events happening where you get the pandemic and you get the Fed going crazy, and it's just this wild swings. But wild swings create good opportunity. Okay, gold, important to watch, because gold is kind of the counter dollar, and the dollar will signal a lot. You know, the dollar will signal mostly where all the markets that are priced in dollars go. So bonds, stocks, you know, everything. So important to watch gold as well and how it's trading. This is also, you know, what are investors anticipating in terms of inflation? What are investors anticipating in terms of risk off? Everything there. So gold closed the week below the resistance line. We had a big impulsive week last week in gold, where gold really closed down at 1858, and then a little bit of a kickback week, but still kicking back to resistance and failing right there. So nothing out of the normal. Downtrend is still intact in the short term. We have this uptrend line here in gold that's really marked. We've got a couple reactions that have marked it out. It's not the cleanest trend line. It could be adjusted somewhere. You know, you could adjust it potentially here and something like that. That actually lines up pretty clean. And, you know, basically what I see though is, you know, even if we have it right here, we've got a reaction down here, a reaction right in here, a reaction right there on the weekly. And then, so that would, to me, tell me that we're coming down to this level, 1825. However, I think we're going to undercut it just slightly and hit this 1790. I get this 1790 going back to 2011 through 2012. And this was major resistance in the last bull market. This was kind of the top of the market in terms of a resistance level. We overshot it just briefly right here, but this was just an overshoot. There was only a single reaction cluster, and then we got a series of reactions right there. So that's the resistance, 1790. So I think we come down and tag 1790, and that should hold. I would expect that to hold. If that does not hold, there's some bigger issues going on, but I do expect that to hold. So we're going to look at that. Here's the dollar on the weekly charts here to take to pay attention to is this big uptrend from 2011 in the dollar, and each candle's a week, so this is a lot of time. We broke down and we're coming back in for a back test. This is a rounding bottom pattern is what this is doing. Now it could form a cup and handle because we're starting to kind of pull back right here, but basically you get this rounding bottom, and then maybe you make this handle where it just kind of consolidates slightly, can kind of work its way a little bit lower, and then you break higher and do the back test. So I see a back test of that level, 95.50. If it breaks above, again, that would, there's bigger things happening, so we'll have to evaluate that if and when that comes. Let's look at Tesla. This has been a high-flying stock, and it's been a real momentum trade this year. People buying it because the price is going up essentially. And I know several people that are buying this thing, and they weren't buying it early. They were buying it, when it was at 1,500 before the split. And they, when I start hearing that, it reminds me of when Bitcoin was, running up to 20,000, and everybody was telling me about Bitcoin, and I'd known about Bitcoin for a while, and they were asking me, what do you think about Bitcoin? Should I buy Bitcoin? And when I tell them, that's a bubble. When you hear things that are where everybody's interested at record prices, and you look at the chart and it's just shooting straight to the moon, it's just an emotional, it's just people can't help themselves, I think. So to me, that's what Tesla feels like. Weekly right here, we had a week, a soft week where we closed down at the low of the week, slightly higher close than the previous week. But we did break the trend line right here on the weekly. We just briefly broke it and closed below. It's marginal. It's just right there. So we'll see what next week brings. Next week, maybe we pop up to the top end of this trend line, maybe around 427.60, and then get rejected. And if that happens, I would look for a big down week. So the point is, if it stays below that trend line, then we should see a big impulsive sell off in this stock. And so that's what I'm looking for. Negative divergence right here on the weekly, and we made a marginal new high last week, setting in the negative divergence, and you can see the RSI starting to turn back down. The PPO is starting to turn back down. The PPO did not have negative divergence. It was just in the RSI, so that's something to note. That's all I see there in Adobe here. Uptrend line going back to March 2020. We broke trend right there with that candle, and then did a full back test, and we're starting to roll over. So when you look at the weeklies, it keeps everything in a really clear, easy to read picture. But these are big ranges, so you can see we just broke trend, back tested, rolling over. So we do have this support line that we've been walking up on the weekly. A break in that support line on the weekly should set in motion the larger term downtrend in Adobe, and I do think that's what's going to happen. We also have negative divergence here, right there. Looks negative to me. Yep, negative divergence there in the RSI. Did not have it in the PPO, but we have it in the RSI where you made a high here, and then you made a higher high here and a lower peak in the RSI. So that's signaling momentum starting to fade. It's not a huge fade, but it's starting. And so look for a break in price support, and usually that's all she wrote. We start some sort of a downtrend in the weekly chart. If you want to go back and look at the bigger picture in Adobe, You could probably mark out some sort of major trend line. See if we can find something that's clean. Yeah, we broke it down there. There's nothing super clean, really. This is going back to 2011. There's your 2009 lows there. We don't have anything that's extremely clean when it comes to reaction, so probably have to just mark that out and leave that as the trend line. And so, you know, if we break the trend up here, then that could be what's needed for the downtrend, which would be a move all the way down to maybe some sort of trend line down here. And, you know, from here to there, you know, 30%, yep, that would make sense. I mean, that's a pretty realistic drop in some of these high-flying tech stocks. And then we watch the major trend lines. NVIDIA, moving in here. Same deal, bearish rising wedge. We broke the wedge here on this candle, back tested again. We keep getting rejected. That's a doji. That's a doji candle right there. So what you would look for now is a confirmation week to confirm that this doji is a reversal doji. So look for a sell-off week closing lower in NVIDIA, and that will be a nice confirming candle. And then, you know, there should be continued downside after that. And that's all in the pattern of this bearish rising wedge. It's setting in motion that this is going to start to break. No negative divergence, though, in the RSI or the PPO. And so because we don't have that, for me, it's not the cleanest stock to short. You know, I don't like it long because it's broken this bearish pattern, but I don't like it short either because we don't have these indicators forecasting negative momentum. So I'd probably just, you know, maybe just stand by on that one. That's on the weekly. You know, the daily and the hourly might have it, so maybe it's better for a shorter term trade. But longer term, it's just not there yet. PayPal here. Trend lines are a little jacked up because this thing got kind of weird. What I really see is this uptrend line right here. We broke trend and we had a little kickback rally, but put in a doji candle. Look for a confirming down candle to confirm that the downtrend is going to continue. That's really all I see on that one. Netflix. Yeah, I don't see anything crazy in Netflix. The only thing I see is a continuation of a potential downtrend. We've got a little bit of support right there, it looks like. Yeah, so you have a support line here on Netflix. We've held it several times, tagged it again there. We broke it here, they recovered it, broke it, recovered it. It's getting messy, this trend line, so yeah, this one I'm not too much of a fan of either. No negative divergence as well. We did have it right, or no, sorry, that's positive. Yeah, this one, no negative divergence either. So not a fan of this one for really shorting. You know, if it's not a clean short, you don't want to take it. Stocks go up a lot more often than they go down, so you want to take the best setups. So obviously you could, I guess you could just stay long this one until you get some sort of signal or chart sets up for a short. Okay, KHC. We held this week above this support line right here at 30 bucks, and you can see undercut it last week. This week they ramped it up and closed it above 30. So what does that mean? Well, you know, that could set in motion a move back up to the next resistance line, which is 33.61. Or we could fail here. As of right now, we're above support at 30 bucks, so I would look for that to hold. If that doesn't hold, then I would look for a move back down to 28.50, and then a break of that, we're going down to 20, you know, about 25. So I'm anticipating we're going to go to 25, but again, you know, we're not there yet. On the weekly, we do not have negative divergence, so no negative indication that we're going to go lower. Still positive price momentum as price continues to move higher. So I'm looking at this one as a potential bottoming, kind of a larger term bottoming pattern. This thing's been in a bear market really for quite a while. And you can see from the high of 2017, it dropped 80%. So for it to start to bottom out and find some buyers would make sense after such a large drop. Philip Morris here. Bigger picture, you've got a downtrend line right there where we have had several reactions along that downtrend line. And we broke above it once, failed, was a bull trap. I say this a lot, but I'm just confirming it. We've broken again. We're coming back in for a back test. We should hold here. That's what I'm expecting. If we get a weekly close back within the price channel, and it's nothing more than it shouldn't be. It should just be a marginally weekly close. I don't even expect that we get a weekly close below. To be honest, you can see here this week we had the week dipped below here, and that's what it did on Friday. Just dipped below and then came back and recovered. So that was a whipsaw kind of false breakdown. The buyer stepped in and bought it, bid it back up. So I think that that's what we should see. If we're going to see some more downside, should just be kind of whippy, slicing through here and then recovering. I am expecting the buyers to be here. So if they're not, then we'll stop out, move on. I am long this one, but I am expecting this to move up. Target, really I'm looking at these targets up here. We've got a big breakdown candle right here. And if we're breaking out of this downward pattern, it's not going to, it's going to be whippy while we're building some support, but I'm expecting us to move up to $90 for the first profit target, and then 150. This looks very similar to the Barrett Gold trade that I was talking about years ago, a couple years ago. I had this, here's the down channel that I had right here on the weekly chart in Barrett Gold, and then we were just moving down. We started to break out, and you can see as I zoom in, here's your first breakout, and that was a false breakout. It broke back down into the channel, and then we actually broke. And it, broke out and started to make higher highs and create a new bull market. So going back to Philip Morris, you can see very similar down channel starting to break out, looking for that, really looking for that bull market in this stock to start. And that doesn't necessarily mean play well with tech selling off, but again, this is a value stock. This is a potential recession play. People buy vice stocks when they in recession, alcohol, cigarettes. Not passing moral judgment. This is really just about trading a financial instrument that offers products to people that they want. So everybody's been talking about oil, so I'm going to wrap the video up here on XOM. This is a stock I'm interested in. I think there's a lot of value and opportunity to be long this stock, but I'm not interested in it yet. I took a shot at it earlier this week and stopped out for a small loss, and it continues to, it's just not firming up, showing me the signs that it's ready to move higher. So on the weekly, we have this down channel right here, and it just continues to run down this channel. We close pretty much at the low of the channel. We do, if we turn up here and break out of the channel, then we would have, we would start to put in some positive divergence. Or if we sell off a little bit more and the momentum on the weekly, the RSI, maybe comes down to here, then that would set up a positive divergence play where price is making a new lower price and the momentum is making a higher low. So that would be something I'm looking for. And I don't want to look at the hourlies and stuff, but you have this down channel. So a break of the up channel would be really what you'd be looking for once you get that positive divergence in the indicators. So looking for positive divergence to start to set in, and then we'll start to look for signs on the shorter time frame charts of breaking resistance levels, and then we'll jump in long. Ideally, I was hoping that they would cut the dividend on this one. I'm looking for a dividend cut, some sort of an announcement, and a big washout move. And I would expect this thing to really wash out if they cut the dividend. And then that might be a pristine opportunity to buy this thing and then watch for price appreciation. And as the price appreciates and the stock company becomes healthier, they'll bring back the dividend and could be a really good longer term hold. Okay, 30 minutes long. I'm going to wrap it up here. These weekly charts, it's hard to cover a bunch of individual stocks, but I want to give everyone an idea of kind of what this week meant. I didn't see it as a real pivotal week. I didn't see this week as giving a whole lot more information in terms of, there was no real inflection points or anything like that. So I think it's just a continuation of some of those moves we saw last week. But I'm still anticipating the directions that I've talked about to continue to play out. I don't see a change in posture on a lot of these things. So that's how we're going to play it, and we'll look to next week to give us some more information. Thanks, everyone. Catch you on the next one.